2022 was the year that shook the real estate market. Predictions came from hedge funds, banks, associations, all kinds of places as to what exactly was going to happen now that we were heading into a higher interest rate market. Well, the year has ended and we are now 1 month into 2023. So let's go ahead and take a look back. Heading into 2022, we had already broken record after record in the real estate market. We ended 2021 with just under 38,000 sales, which, yes, again, was a new record. Our inventory was at 3,600 homes available for sale for a population of 2 million. Homes were selling on average in about 11 days. In reality, it felt more like 3 or 4, and those days were just spent time negotiating offers that came in that first weekend. All this brought our months of inventory, which measures how long it would take to sell everything currently on the market, to under a month. And months of inventory tells us the type of market that we're in. Typically, when we see 1 to 3 months of inventory, we're in a seller's market. So we were at less than 1 month at that time. This caused the median sales price of a home in Las Vegas to rise to $430,000. This is how we're going into 2022, okay? Now, there were lots of talks about rising interest rates, and in January of 2022, the 30-year fixed rate mortgage was just under 3.5. By mid-March, we were already one full percent higher. Even with this happening, the market continued to trend up. This was most likely because of buyers wanting to get into their new home before their interest rates just got too out of hand and became unaffordable. As they continued to rise, we saw a large portion of the pool of buyers begin to get priced out of the homes that they were looking at. Even with new builds, you had a bunch of new construction, people that were under contract for months that had to cancel their contract because interest rates became too out of hand. Then on top of that, we still had low inventory and prices were still elevated, leaving many people with no options but to just wait. Now on the supply side, once it was apparent that interest rates were going to continue to rise, we saw a significant increase in the amount of homes that were available for sale. This was also most likely due to sellers who were rushing to list their homes before missing out on the opportunity to sell at the peak. In March, we had 3,400 homes available, and by September, we were at 10,000 homes for sale. Well, the peak in prices did come, and with that, the descent into the cooling market. In May, the record for the median sales price was broken for the last time at $485,000, only to come down to $480,000 the very next month. This began the snowball effect of sidelining another large portion of the buyer pool who still wanted to move and still could move, but with the decline in prices decided to just hold off to see exactly how far down this goes, thus bringing demand down even more. At this point in January of 2023, we have seen monthly sales drop by 50% year over year. We had 1,495 closings in the month of December. With that though, our inventory levels have also gone down from that peak of 10,000 to hovering around that 5,500 mark. Now, this isn't only due to homes that are actually selling. This has a lot to do with sellers who weren't able to get the price that they wanted and ultimately decided to remove the house from the market. The median sales price of a home here in Las Vegas has dropped down by 13% to $420,000, putting us 10,000 below what we started the year off in 2022. Now, this doesn't mean that prices dropped 13% across the board. Specific neighborhoods that might have higher demand might have dropped significantly less, or specific homes that are very unique have been affected differently as well. And then when you break it down into pricing segments, you also have each of those being affected differently. Over the course of the year, the average interest rate increased to over 7% and peaked in October. It has since gone down to about 6%, the low sixes. And this has been due to an improvement in the economy and inflation. This has led to a big influx of new mortgage applications from buyers looking to capitalize not only on the lower interest rate, but the lower prices that we currently have. As we enter the busier season of the year, we have both buyers and sellers at a standstill. Buyers who are choosing just to wait to see how much lower this can go, and sellers who are choosing not to move because they have fantastic interest rates on their mortgages, so they see no need to. However, there are still plenty of deals to be done. As you saw last month, we had just under 1,500 homes that closed. And if inflation continues to trend downwards, that should essentially bring down mortgage rates with it, fingers crossed, and bring that buyer demand back because of improvements in affordability. And that's it for today, guys. Thank you so much for watching. We really do appreciate it. If we can help you in any way, shape, or form, by all means, feel free to reach out. See you guys on the next one.